bottom line.
Hi, I'm Jacqueline Powell, and I'll be your host for today's episode. When it comes to system failures and unforeseen disasters, the term operational resilience goes beyond simply managing and recovering from such failures, might I add, with customer-centric approach and many assurances. But quite seriously, these sorts of incidents can cause wide-reaching harm to your customers, your firm's long-term viability, to market integrity, and of course the financial system. So, strengthening one's operational resilience is more about creating a very clear objective of avoiding such incidents and clearly understanding the service that your organization provides, or rather, the ramifications of not being able to provide that service. Whether your organization is a financial institution, a business, any man made or natural disaster actively proves out how important it is to invest in and strengthen your operational resilience. Your ability to track impact tolerances, map business services, and test the delivery of services are all really critical elements of operational resilience. Now, I'm led to believe that the UK is bringing in new legislation to support this initiative for financial services firms that will have valuable lessons for any business, regulated or not. To talk about this in more detail, I have the pleasure of welcoming payments industry expert and Bottomline's head of solution consulting, as well as the industry lead for EMEA and APAC, Richard Ransom. Richard, welcome.
Thank you, Jackie. I'm really happy to be talking about this subject today. I've spent a lot of time in the last couple of months speaking to organisations across the UK, once again, both regulated and non-regulated, about the issues and why SS 121 is actually a really good guide to any organisation into how they should look at their business continuity plans.
That's great. Thank you. It's good to have you with us. In my introduction, I touched on man-made and natural disasters. Given past threats like, we had COVID pandemic, the instability of the global banking system, and other geopolitical events like the Russian-Ukraine crisis, how have these incidents influenced the interconnectedness of the financial system and the need for resilience building in the UK across all sectors?
Yeah, great question. And I think in terms of those geopolitical things, you mentioned, instability of global banking systems. So we've seen two banks nearly collapse. There are national conflicts going on globally. And also things like the outsourcing of systems, processing and people to potentially different geographies or organizations that you may not have 100% control over, make it really obvious that something needs to be done to address that, the need for business continuity. So I think something that came out in the last couple of weeks, in fact, earlier in May this year, when the government disclosed that the MOD or a partner of the MOD had been hacked and there had been a data breach. So it's really important to note. We know that there are organisations who are victims of ransomware attacks, and that can really do large damage on an organisation. But outside of that, and in talking really about that top level interconnectedness of financial systems, I think people have believed that financial systems are bulletproof, right? The right infrastructure right at the centre. But last year we saw issues with CHAPS in the UK, and in Japan, their national payment system, one of the oldest real-time payment systems in the world, also went down for a couple of days, causing massive disruption.
Are there any deadlines to adhere to or interim milestones that businesses, FCA regulated or not, need to work towards?
Well, firstly, I'd say any organisation, whether regulated or not, needs to look at their business continuity right now. This is an urgent thing and this should be top of the agenda. If you're looking at how resilient they are to not just those attacks, but to payment systems going down, their own systems going down, what happens when they outsource services? So that's an important one for everyone. In terms of the regulated firms, all of these changes that SS 121 suggests that you look at and make need to be implemented by March the 31st, 2025.
So deadlines are quite tight then.
Yeah, and this has been known about since 2021 with hence the name SS 121. In 2022, organisations were meant to have had plans sort of nearly ready and going, but we know that lots of organisations have spent a long time getting to this or working out really how far they could go. And this is why some of our customers have come to us and said, how can we mitigate against this particular fault in our own system? So yes, important to note, we've got less than a year to go, and we know that organisations are really just looking at some of this now.
Looking specifically at regulated firms, then the upcoming enforcement of SS 121 regulation by the Prudential Regulation Authority, or PRA as it's commonly referred to, states that firms, their industry groups, and the financial sector must be able to prevent, adapt to, respond to, recover from, and learn from operational disruptions to important business services. So, Richard, I actually have two questions on this for you. Firstly, can you define what's meant by important business services? Do you have any practical examples to share on this?
So I think the definition that PRA have is that they expect firms to identify important business services that a disruption might pose to financial stability, the firm's safety and soundness, and business consumer protection. So they're looking for businesses to look at where they have vulnerabilities and where any vulnerabilities may, as I say, cause harm to them internally or externally to the people that they serve, that businesses or people. And in our world, we're focusing very much on payments.
Thank you. The other question I wanted to ask you on this is, what are the primary challenges that firms and the wider financial sector will face to comply with the SS 121 mandate as it relates to payments as an important business service then?
So I think where we've seen the issues are in terms of just defining the tolerances in harm to these different business services. So looking at each one in turn and saying, right, what's my tolerance to a failure here? What's the harm that can be caused? There's a big difference between in terms of things like backs. So with backs, I can make accounts payable payments. If I miss an accounts payable payment run by a day, that's not necessarily going to cause many people any harm. If I don't pay someone's pension or payroll by a day, that's a completely different matter. So I think getting the tolerances in harm and really understanding that is important. I think organisations knowing their payment processes is also very difficult. We know that payment processes tend to be fragmented, and international and domestic payments may not sit on the same platforms, and different ERPs may have different banks connected to them. So you're looking at multiple bank connections, multiple systems feeding those connections into other systems like backs. Knowing those payment processes and the things that you pay from them can be quite an arduous task for an organisation. But once you get there and you said, right, I do backs, chaps, Swift through these various channels, and I collect direct debits here, or I'm running a set of currency account here, then you've got to look at those processes and say, right, how many potential points of failure are there in this process? And it will surprise organizations. So I can look at a backs process for a direct debit run. So if, as a large financial services organization or a large utility or a large biller, you don't do a direct debit payment run on one day, that can be millions of pounds of impact to your bottom line and your cash flow straight away. So then when you rewind that back to the start of that process and start to look how many points of process, there's probably about 11 or 12 different things that when they go wrong could stop that process working. And then you've got to look at, how do I fix for that? What's my mitigation there? So that's right from my core system hasn't created the file, right up to backs has stopped working. So the actual payment system can't accept my files because there's an issue. So that's, there's a lot there, but I think these are the challenges we are seeing. People just don't necessarily know how big a problem they have, and they haven't necessarily looked everywhere in the process. And these things are, because of the fragmented nature of technology, lots of different places.
What are the essential measures and the insights that any business needs? So not just regulated organizations. And how should they approach the development of their contingency plans for payment processes?
So I said before, I think the framework of SS 121 at defining that tolerance and harm is a really good model for organisations to look at how they look at and work out how to mitigate the effects of business continuity issues. So I think in terms of insights, it would be to go back to that. Just know your payment systems. Just know where you are and think about very seriously where things can go wrong. And don't think, as I mentioned before, that BACS never goes wrong and that could never break. Or this channel that I put my payments in will never stop. Or the bank will never break. We'll just assume that's a risk we can manage and just concentrate on your own internal processes. Because that's the wrong way to look at it. You need to be able to say for everything in the process, if there's going to be a real harm on you, right, should the front end of BACS go down, how can I get around that? Is there a different route for my data into BACS? Should my bank's host-to-host system go down? Is there another way I can get that important payment data into the payment system and running? How do I get around that? How do I do it? Is it something fairly industrial that I have to do? So do I go from a host-to-host connection to uploading files into an e-banking portal and having to chop that data into lots of 2,000 records, for example? But I think my insight would be just really, really examine what could go wrong and then just look at and take your assumptions of what possibly couldn't go wrong and then reevaluate those.
It's interesting that you talk about the possibility of national payment schemes being out of action or banks being down as an example. What is being done at a national level to ensure that if a key infrastructure actually did go down, payments could still be made?
Yeah, it's a great question. This is one thing that's come up many times when talking to customers about business continuity in general. So as I mentioned before, CHAPS went down last year, so new payment system. There's just been introduced, so changes to CHAPS were introduced and there was an issue. The Japanese payment system went down, but we have seen issues with BACS in the past 15 or so years. Now, if you look at BACS and faster payments, the infrastructures are getting old, which is why a new payments infrastructure is still being considered, although that's paused at the moment. But BACS has been with us now for over 20 years in its current incarnation, which is the modern incarnation of BACS. As it gets older, the risks grow as the technology fails to keep up with what's happening. And the way that BACS has been architected makes it more difficult to fix everything. So we are beginning to get at the edge of what BACS can manage in terms of transactions, or certainly will in the next couple of years. So until it's replaced, there's definitely a risk something could happen there. We know that other parts of that system, like liquidity, could be an issue. So what's being done at a national level, and it's sort of coming out the same work, is that the infrastructure providers are looking at substitutability. And this is something that also businesses should look at as well. How do I substitute a payment type? So if I can't make a BACS payment, can I make it by faster payment? If I can't make a faster payment, can I make it by CHAPS? These things are being thought at a business level, but also at a national level as well. Can we identify a payroll payment, for example, that was going into the BACS infrastructure, and if the BACS infrastructure isn't working, can we route that to a different one? Could we just put that straight into faster payments? So this is really interesting. I really like this thinking at an industry level of really belt and braces, because in the past, when these things go wrong, it's just panic. CHAPS had a serious outage a number of years ago, and that led to the need for the new CHAPS. But there wasn't any other way of making that type of payment. So you just had to wait until it was fixed.
So, Richard, not mentioned in your response about key infrastructures, what about a bank going down?
Yeah, and that's tough. So from a point of view of their channel going down, their host going down, there's often a more agricultural manual e-banking option to help payments be made. If it's the bank's processing itself, then this can be problematic. So some organizations have already looked at the risk and through the credit crisis, who would have thought one of UK's national banks would have to be privatized to save it? And in those situations, we know lots of organizations have managed their risk by having multiple bank relationships. That doesn't necessarily make it easy for an organization to switch from one bank to another because they need to fund the accounts they're making payments out of, and it certainly won't help with things like direct debit. For the banks itself, there are methods and discussions at a national level as to what can happen in that situation. So how prepared is the banking system for a bank to go down? Is there enough liquidity in the system to cover all the payments, for example?
That's interesting. Richard, my last question for you. So looking forward, how do you see the landscape of the payment system and operational resilience evolving in the UK? What are the next steps for financial institutions and businesses to further enhance their resilience against future crises and disruptions?
So that's a great question at the end of this. So we've considered the current threats and the current issues and what you can do to mitigate what's happening now. And I think the world continues to move forward, and we will get a new faster payments infrastructure in the UK, and there will be a new version of BACS or differences in the BACS service. So the different types of the tolerances to those new things will have to be defined as we move along, and we may not necessarily know how that will work. We know that when CHAPS was introduced, the new version of CHAPS was introduced, that there were issues on that implementation. We also know that because of that, when the new payments architecture appears, whenever that is, that learnings from that will have been introduced. But this isn't just about those national payment systems. Even internally with businesses, when organizations decide to outsource and change the process they're doing now, when they're going through digital transformation and moving services to the cloud, and that might be your ERP provider moving you to the cloud. In those situations, you've got to go back to that in the planning process. Right, if something goes wrong, how do we mitigate it? If we put everything through a host-to-host connection with our bank, every single payment type, does that work, and are we introducing risk? For example, if you have a direct connection to BACS today, should you then move that direct connection to a bank host-to-host connection because your ERP provider has a solution to do that? Or should you think about the risk of doing that, adding another potential point of failure to your process and adding more risk? So your BACS, the front end of BACS might go down, but there's other ways to route data in there. If the front end of your bank host-to-host connection goes down, then it's going to be a lot more problematic. So organizations and financial firms have to remember, and they certainly are, that things are not slowing down, and there will be new risks, and there will be new payment types, and there will be new tolerances and harms that they've got to consider. So one thing that I'll talk about potentially in the new payments architecture is a payment type which looks a bit more like a card transaction than a faster payments transaction. So something that is either approved or declined within 5 seconds, that it's going across the faster payments rails rather than the card rails. Can you think of that situation where having such a real-time payment method might cause a lot more harm if you don't look at your tolerance to that properly and mitigate against that? So building resilience into that process before those things happen.
Thanks, Richard.
Thank you, Jack. And I think one thing I'd end with, it's very easy to be wise after the event. So I would really encourage organizations to just look at those payment processes and the important business service from the point of view of resilience. Just look at how many points of failure there are. And I know a lot of organizations are massively surprised by how many things could go wrong in that process that they haven't mitigated against.
Great chatting to you. And it brings us to the end of our episode. So thank you for joining us today and for sharing your guidance on this very important topic of operational resilience.
Thank you for having me.
You're most welcome. And to our audience, thank you for listening, and stay tuned for upcoming episodes sharing payments related insights for both financial institutions and businesses. The Payments Podcast is available on Apple, SoundCloud, or Spotify. Until next time.
podcast from Bottom Line.